I made over $42,000 day trading today using this one entry model. And in today's video, I'll show you exactly how I did that from my buys all the way into taking entry and seeing take profit get smashed. First day back in Jersey, phenomenal one, visiting my parents, very excited. Let's get into it. So we ended up coming into the Asia session last night, being a bit more neutral. A lot of times I'll look into Asia in case Asia trades well so I can get a head start for the trading session. And kind of coming into last night, initially wasn't really looking at it too aggressively. However, we then ended up seeing Trump talk about a ceasefire with Iran, causing a lot of volatility in the market. So with that, I ended up looking to go base off Asia and looking to potentially go risk on, because off the open, we ended up seeing tremendous volatility we have not seen in months in the market, and we ended up seeing price really push off aggressively. So if we look at NQ here, obviously looking at the bulk of New York hasn't really done much in comparison. Asia ended up pumping a total of 800 points. 800. Very aggressive. Like I said, I wasn't too one-sided, kind of coming into the open, a bit more neutral as I usually am on sessions through Asia, because Asia typically tends to usually trade slower. However, through the open, we ended up seeing price come down here initially, wick down, fill the new day opening gap, and then tremendously expand. For me, we ended up seeing some buy-side targets get hit initially. However, for me and how price was engulfing, it was clear in my mind that price wanted to draw higher. Now, Lento, what were your targets above that? Well, if you go to the 4-hour here, looking at the 4-hour, we had a 4-hour internal high, right? A wick high, a swing point as well. And we also had a daily internal high. These two levels right here specifically were levels of draw where I wanted to see price get into or get hit into ultimately, and we end up seeing price ultimately do that. So for me, being bullish off the open, what I was looking to do was simply looking for price to retrace in the market and give me a continuation entry model. Obviously off the open, I'm not expecting price to rip this much, so I can't take a reversal trade or I can't take a trade super early. I then just proceed to take a trade later on. And so for me, the way I was able to dictate how price was still continuously healthy and that price was going to continue to trade higher was that price was consistently making new highs after seeking retracements, right? We retrace here, obviously mine and Swick, we see price trade higher. Retrace here, trade higher. Retrace here, trade higher. Retrace here, and ultimately trade higher. By the time we got here, I was fancying a potential retrace into an inbounce where we rebalance and then come back up, right? So exactly the first idea of the day was a long here where we ended up going based off a 5-minute bullish fair value gap. Now, this was not the BPR entry because this trade ended up resulting to a break-even trade. You see me mentioning here a clear Asia trend, liking the potential and upside. Idea is 5-minute fair value gap rebalance, tap CE, and move back off it. Stop loss could be the swing point or the model stop loss. Target the 4-hour BPR fill, 1-day internal high. Those two targets where I wanted to see price draw into. That's why I have such aggressive take profits in mind, because price is aggressive. When price is aggressive, you step on the pedal. We end up seeing price come up here. We end up taking this trade here off price rebalancing on the 5-minute gap. We take entry. I mentioned I'm long. However, this trade goes break even because it's not we were bearish. It was more so price was at a state of consolidation, right? Price is choppy. Understandably, after seeing a 600-point rip, you're going to expect to see price start to slow down again. So Lanto, if price is chopping, why the fuck would you take another trade? Well, here it is. 1, price, and 2, the type of entry. And this type of entry is called a BPR violation. It's a balanced price range violation, which if you guys don't know what a balanced price range is, it's essentially where you have 2 gaps in one time frame in one zone. Let me break it down. The second idea right here specifically was the BPR entry. Idea, 5-minute bearish BPR forming. Balanced price range. If we see a violation of it, creating a bullish sequence can look to re-enter longs. Same targets as last trade. So with this here specifically, you have a bearish BPR, and what we're looking for price to do is violate it. So a bearish BPR includes a bearish BPR includes a 5-minute bullish fair value gap, which turns into a bearish inversion fair value gap, and then you also have a 5-minute bearish gap, which you want to see price turn into a bullish inversion fair value gap. So a violation of both sequences, and you end up seeing a price ultimately come back up here, and you see price ultimately look to draw higher, right? So with me specifically, Lanto, price was choppy off the first trade. If you know price is so bad, why take a second trade? Well, this is a big key component, right? If we have 2 imbalances, which are theoretically bearish because we end up inverting this 5-minute gap on the 1-minute time frame, which is what I use confirmation for me, I feel, okay, bullish gap inverted. However, We see price come back up, and invert this bearish inversion fair value gap, and then also invert this bullish or bearish fair value gap. What's stopping price from drawing higher, especially with price already drawing up 600 points through the ceasefire news? Why would price not look to reach another 100, 200 point pump, just continuing off what we had already done into draw targets? That was my mindset. So we end up seeing price come up here. We see a violation of 2 gaps, not just one, as typical traders use. 2 gaps, double confluence, extra confirmation, which is what we look for. We end up seeing price come up here. You see me mention confirmation. We end up placing stops off the swing low, targeting the 4-hour BPR fill, and also the daily internal high. We eventually end up seeing price come up here. You see me post executions. It was a slow trade at first, but we see price ultimately go, and we see take profits smashed. Beautiful trade. You see price smash take profit 1, which was a 1.6R. That's first target. We then go risk free, right? If you haven't already, then we look for that take profit 2 being 25.210, which is ultimate take profit. We see price come up here, and we see profit target smashed. You kind of see me make a joke here, but I pretty much said, yeah, we're going to draw into that target. Could put my net worth on the line. We ended up doing that. Very successful trade, very good trade. And off this right here, we could easily very much so called it. We could have called it a night. We could have called it a day. With my mentality and how I approach trading, I have a 1-0 mindset, right? If you're really asking yourself as a trader, how many times a day does your model present an A+ trade? For me, it's maybe once or twice, if that. So for me to catch an A+ trade and capitalize tremendously, conclude your day and move on. You guys have to remember, trading is a long-term approach. You won't become rich overnight, right? It's a process where you have to get better and better and better over time, and eventually you get to scale up a lot more quickly. So we end up taking the trade, come down here, and then we end up waiting until New York. The thing with London is we didn't see much go on. We saw Asia rip targets. London pretty much just solely chopped up into higher draw, kind of extending a bit off of what we did through the ceasefire news. Then we end up seeing price off the open, essentially not really do much, right? Off the open, a bit consolidation prone, but then we end up seeing price, or we end up seeing price come down here, and we see price run into our London low. If you guys don't know what the opening range move is, I utilize the opening range move. The reason I do that is because I like to utilize a combination of overnight price and a combination of New York open to get a gauge of what price is going to do. So for me specifically, I use higher time frame, I use overnight price, and I use opening range move, right? And so for me specifically, in coming into the open, I was pretty bullish. A, because we had seen a 600 point move overnight. B, higher time frames are pointing upside draw. And C, the opening range move here, if it could hold bullish, would confirm that. The opening range move is key though. If you guys don't know what the opening range move is, simply click on my YouTube channel, go back. You have a perfect video explaining exactly what the opening range move is, talking about that. So we end up looking at this idea. The idea was model stop loss, looking for a 1 minute gap to go invert. We don't end up getting this trade. And so for me, the reason I was so comfortable with potentially putting risk on for higher here is because, again, with those components, alongside the fact that price had put it in a low of day, initially off a 4-hour gap entry, a 4-hour fair value gap entry. And as you guys saw through the trade that we took last night, the first trade that went break even, you see the 5-minute gap get tapped into, you see price rebalance, and then you see price go. That's how I view imbalances, right? When you see price come down, rebalance off the gap, and then you see price come back up, that's telling you that price has filled liquidity, filled the void. Now we come back up and we see price trade back above. There should be no purpose in price coming back down here at this point in time after touching the midpoint of this gap or an entry off a gap unless it wanted to seek lower like the fill. And that's why I'm saying mindset with every time frame. And so for this 4-hour gap entry, we see New York put in a low of day off this, but then we end up seeing price come back down and we end up seeing price take that low and look to trade lower. So for me at that point in time, this no longer looks like a bullish setup. This more so looks like a lower high and lower trend, right? A bearish trend. Because we come back down after initially tapping and bouncing, showing a bullish reaction off that 4-hour gap entry. If we're so bullish, we shouldn't need to see price come down and put in a new low, right? We should see price rebalance and go, just like we had that Asia trade last night be. So we end up seeing price come down. From there, flip narrative, and instead of looking for higher, I simply looked for lower in the 4-hour gap entry, or 4-hour gap fill, and the hourly gap entry below it, right? Larger right through higher time frame, just because we saw a 600 point rip within 15, 20 minutes, 30 minutes, whatever it was. So pretty aggressive. Then you end up seeing me flip narrative and look for this potential short. This short idea here specifically was a 1 minute BPR violation again. Last night's Asia successful take was a BPR violation. This trade right here was also a BPR violation, except we're looking for a bearish trade here. So Last night's take, bearish BPR violation. This one's a bullish BPR violation. You can clearly see we have a 1 minute bearish gap turn into a 1 minute bullish inversion fair value gap with this candle. And then you also have a 1 minute bullish fair value gap right here as well. So you have two bullish gaps right here at this point in time. And then you see price come down here and you see price violate it. So for me specifically, the reason I find so much success with this entry is because you have that double confluence. And so if you're ever indecisive in the market, even if you just want to use BPRs for bias, what you can more so look to do is look at something like this and be like, okay, well, what do we do off here? How will price react? And so for me, if I were to see price come down after seeing the New York Open trade so bearish, that simply looks like what? Continuation off what price was doing. Just like last night. Continuation off what price was doing, which was pumping. Today through New York, we dumped. Came back down here, we see price run through this low, and we see price violate this 1 minute BPR. As soon as we get confirmation, which was a closure under, we then go short, I am short, and then 5 minutes after, what do you see? You see take profit smashed. A 1.1 RTP on this trade, a beautiful trade, and we cooked. Whole community cooked, done in front of 400 plus traders, and did very well. Very proud of them, and we killed it today. A 2.9R through Asia, a 1.1R through New York. If you're wondering what the target was here, like I said, it was the hourly FEG entry. Our stop was based off the swing high, giving the trade a bit of breathing room, and we see price come down here. However, price was still trash today. It was not good, but you could see how we were able to more so come out green and be versatile utilizing this idea because it helps with bias at minimum, and it could also be used as an asset for entries. So that's pretty much that. With that being said, I'm going to wrap it up here. That's the review. That's how I use my entry models. And I'll catch you guys in the next one. Peace out.